This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
On today's Bloomberg Intelligence Show, we dig inside the big business stories impacting Wall Street and the global markets.
Each and every week, we provide in-depth research and data on some of the 2,000 companies and 130 industries our analysts cover worldwide.
Today, we'll look at why Ford Motor is recalibrating its electrification strategy yet again.
Plus, we're going to discuss the M&A space and the potential for what could be the biggest foreign takeover of a Japanese company.
But first, we dive into the biotech space. This week, a 3-year study showed that patients taking Eli Lilly's blockbuster weight loss shot were 94% less likely to develop diabetes.
Eli Lilly said that this is the longest continuous study of its Zepbound drug to date, and the company's shares rose to an all-time high after the news.
For more, Alex and I were joined by Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals Analyst.
We first asked Sam what numbers from Eli Lilly's study jumped out.
Let me take you back a little bit. Were we not always told, when we went to the doctor and we started, our glucose was going up, not you guys, obviously, you're fascinatingly, amazingly healthy and fit. But those who weren't, and told you need to lose some weight, my friend, because you're at risk of developing diabetes. So where is the shock? If you reduce weight and manage the obesity, you lose all these, I've been repeating this thing, sleep apnea, risk of developing diabetes, everything that we're talking about here. You eat less, you lose weight, less risk of developing diabetes. So not exactly a shock. Nevertheless, it's great to see that it actually does what it says on the tin, that by reducing weight, you do manage all these side effects. But before we get too excited, I want to highlight one little wrinkle here. There's no wrinkle with the data. If you read the press release, and I've got it right up here on my terminal, Eli Lilly company announced positive top-line results from the SURMOUNT-1, a 3-year study, 176-week treatment period. Find me somebody who stayed in the real world on this drug for 176 weeks.
Yeah.
So
we survey physicians. What do we find? 40 weeks. I'm sure it's going to go up, but that's very different setting. So how much of a real world will this actually translate into in terms of preventing diabetes? Time will tell.
So you're not saying that the study was bogus. You're saying the study was real, but in reality, people don't stay that long on the drug. Therefore, the results won't be as magical for them.
Right. In clinical trials, you get the best possible data, basically, because it's highly controlled. People are followed. You make sure that they stay on. There would probably have been people who have dropped off here. So maybe the actual average treatment period wasn't exactly 176 weeks for everybody, because people do drop off. And I'm assuming in this trial, the data they're reporting to us is what's called intent to treat, i.e. you've intended to treat that patient. Whatever happens to them, you still count them, even if they've fallen off the drug. Nevertheless, we need to see the detail. But in a trial setting, things always look better than in real world. So here we have to remember average stay time, according to our surveys that Mike Shaw, my colleague, runs every 6 months, it's about 40 weeks, similar to what we get for Wegovy. And even the press release, they say as soon as they came off, weight went back up and the risk started going up again of developing diabetes. So this is not something that you've cleaned it all up. I can stop now at 176 and I'm done. It's the same story over again.
Right, exactly. So I look at the stock for Eli Lilly, Sam. How much of this stock performance is these GLPs?
Oh gosh, if you look at the chart and look at the flow of information and news and the upgrades, etc., that are coming to every quarterly result, etc., to sales, I would say a meaningful chunk of this. I can't quantify it exactly because this is a company that's got other stuff going on, Alzheimer's disease, oncology, skin diseases, etc. So this is not a one-trick pony, but a large amount of this story. And you can tell by when somebody reports a positive result in a competitor setting, these stocks sell off 4 or 5%, right? If you remember the days with Roche, only 3 or 4 weeks ago, I think, right?
Yep.
So, and let's not forget, in a few weeks' time, we have the European Association for the Study of Diabetes. Roche's data is coming out. Somebody's going to be up 3 or 4% that day, and somebody's going to be down 3 or 4%. Who it is, we'll see what the data says.
The point that you made that if people come off it and they gain the weight back, so in that sense, it's not like everlastingly magical. Will there be iterations, though, where that won't be the case?
There's two ways of dealing with this. So you go on the drug, you come off the drug, you go back on the drug, you come off the drug, and you just do your cycling. Every few years after you've got to a point where you think, I don't know why people come off the drug necessarily on an average. Is it side effect tends to get a lot better over time. And maybe it's cost. Mm-hmm. Maybe it's because they're fed up taking an injection every week. So if you put all those things together, as they get cheaper and injections become once a month maybe, or they become oral for the maintenance phase of the dose, and that oral doesn't make you feel ill every time you take it in terms of gastrointestinal, maybe that's the future. Maybe there are other modalities. Amylin is one that Novo Nordisk and Zealand Pharma are developing as a target. That seems to have less side effect issues. Maybe you can maintain your weight loss by those drugs which don't have the same side effect issue. So that has to be the way that you see it, but nobody ever complies with a drug forever.
Our thanks to Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals Analyst.
This week, the department store chain Macy's reported quarterly revenue that missed analyst expectations.
Macy's also lowered its yearly outlook for sales. It cited increased discounting by competitors and a more cautious consumer.
On the other hand, you had TJX increasing its full-year projections for comparable sales and profit. This showed the company's brand choices and execution are working.
For more on all of this, guest host Jess Metton and I were joined by Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst covering retail. We first asked Mary for her key takeaways from Macy's most recent results.
As with any turnaround, and here we are in another iteration of trying to get growth back for this, it's the largest department store, Macy's. They did show traction in the first 50 stores. The comps were up 1%, and that was an improvement from the first quarter, which was up just less than 1%. But the fact is that the rest of the go-forward stores were down 3.7%. This is on a comparable basis, and it's owned plus licensed. So it includes licensed brands that they'll have, within the mix there. So they're showing traction in those little stores, but with the rest of the base, being very weak. And as they pointed out, they weren't really getting the conversion. What they're finding is you bring in salespeople. Wow, that's really if you think about department stores and where they came from, that's what they were known for in the past, was service. But over the last couple of decades, the service and the salespeople have sort of left the stores. Now they're finding if they bring them back, and they bring back the relevant brands, because one of the things that Tony Spring, CEO of the company, indicated is having newness and having the relevant brands that consumers care about. That's where you can get the impulse purchases. And so they're finding bringing in like a Karl Lagerfeld or a Vecla Fee, which is it's like a Parisian, a chic Parisian type brand. It's a US brand, but it has that Paris streetwear aesthetic. And that's resonating really well, and they're getting very strong conversion. So bringing back service levels, bringing back the relevant brands is really making a difference in those 50 stores. So they're going to add another 100 stores where they're going to bring in service and handbags. They did see some strong sales with handbags again in those stores with the Ralph Lauren brand. So that's where I think you're going to see some improvements, is just really better signage, cleaner stores. We've been seeing those improvements in the store that we frequent. They just need to take it across the rest of the base.
And this seems like an about face, because just in May, when we had heard from Macy's previously in their prior earnings report, they had beat estimates, also raised the company's outlook for the remainder of the year. But as you know, this latest report comes on the heels of the company turning down that close to $7 billion buyout offer from one of its shareholders, Arkhouse, and of course its partner, Bridgegate Capital Management. Do we have any indication of whether or not that could be back on the table at some point?
I don't know if that'll be back on the table. I really think that they weren't able to demonstrate financing. I think that was the problem with that. And I also think that the price was low, because even though Macy's is showing very weak results right now, and the market is showing investors don't really like what they're seeing in the quarter, it's one quarter. And it's going to take time before we see real traction. So a year from now, the story could look very different if they're really able to execute on this plan. Closing the stores. They haven't closed the stores yet. They're going to close the first 55. It was going to be 50. They upped it another 5 stores are going to close at the end of the year. They always wait until after the holidays because that's when they generate the most cash. And then, of course, they're going to close another 100 stores over the next couple of years, but again, they might accelerate that. So it's going to take time to show traction. So we'll see how the third quarter and fourth quarter go, especially with some of the changes that they're making to these incremental stores. But nonetheless, you can see who's gaining, and it's on the off-price side.
Let's go to TJX. The owner of TJ Maxx. Stocks hit an all-time high today.
Right.
What's TJX? What are they getting right?
What they're getting right is they have all those brands. They have the treasure hunt. There's fresh merchandise in those stores every week. And the brands range from the very high end. So they'll have Gucci and Chloe handbags. And then they'll also have like Anne Klein. So they're sort of covering all of the demographics with their assortments. And they're making it relevant by store. They have the winning formula. This is an expertise that they have built up for years, and they're the largest out there. It's a $56 billion in sales company. And so in their quarter, of course, they beat with a 4% comp sales, and the consensus was 2.7 and guidance sort of in that 1% to 2% or low single digit range. And of course, They raised their guidance. They're now expecting comp sales to be sort of in that 3% to 4% range, and they raised their EPS by about 6 cents.
Our thanks to Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst covering retail.
Coming up, we're going to break down how the retailer Target ended a string of quarterly sales declines.
You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney.
And I'm Alex Steele, and this is Bloomberg.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
We move now to earnings from the retailer Target.
This week, Target reported second quarter comparable sales that rose for the first time in more than a year.
This comes as the company has been focusing on cutting prices on essential goods to win over inflation-hit consumers.
For more, guest host Jess Menton and I were joined by Jennifer Bartashus, Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Food. We first asked Jen to tell us what Target is doing right.
With Target, what we're really seeing is that they sort of reaffirmed their strategy around creating newness, reducing prices, and enhancing the value perception they have with customers. And this second quarter results, we really see that that is starting to resonate, especially because they're seeing traffic going back into stores as well as online. So really, positive early signs from Target that this momentum might be able to continue.
What about when it comes to consumer packaged good companies? Because you and I have talked in the past, and we know that Richmond Fed President Tom Barkin watches price to mix very closely, and that's a lot of the data that you crunch over at Bloomberg Intelligence as far as what that means for inflation and also the direction potentially for Fed policy. What are you seeing on there as we begin to get more consumer packaged good companies reporting as well?
Well, what we're seeing is obviously there's political, pressure with a lot of rhetoric going on right now about the need to lower prices. We're seeing retailers like Walmart, like Target, like Kroger, like Albertsons pushing back on packaged food companies who are, in some instances still looking to push through some selective price increases. So there is that tension that's happening kind of behind the scenes. But overall, we're seeing prices on the shelf starting to come down, and that spells relief for consumers. It's just a matter of how long it takes for them to actually recognize it and appreciate it and reward it with higher volumes that they're buying.
What's Target saying about the consumer? What are the other retailers that you talk to, Jen, you follow? What are they saying about the consumer today? Because I think as investors, we kind of feel like we're getting mixed messages about the consumer.
Yeah, I think when you're talking about the staple space, which is, where these companies that I follow fall, It's that the consumer is not getting worse. They're not necessarily getting better, but they're sort of holding steady. And part of that is that we've had some consumers who kind of trade down into those middle tier stores or even to some of the discount stores in order to save a little bit of money. So the companies in this space are pretty well positioned because they do well no matter what the economic circumstances are. And I think that's showing through with the results. But they're saying, consumers are spending, but it's still very thoughtfully. And so the things that will attract them to spending is your merchandise mix, your newness, your convenience, the quality, things that will then tempt them into spending the dollars that they're managing very carefully.
You've talked a lot about how you're expecting more consumer packaged good companies to roll out promotions in the second half of the year, like buy one, get one free, buy one, get one 50% off. What are you seeing so far with that as far as what companies are saying on these earnings calls?
Yeah, promotions have definitely accelerated, and we are back at sort of the levels that we were at before the pandemic. What's interesting is most of these companies say that they're able to be more precise, so that it's not just a blanket offer like you used to see on the front of an insert or a mailer, but they're sort of targeting promotions to customers based on what they buy. So they're able to preserve a little bit of profitability and still offer higher discounts. And so I think that's a pattern that we're expecting to continue through the second half and probably into 2025 as well.
Our thanks to Jennifer Bartashus, Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Food.
We move next to the automotive industry.
This week, Ford Motor said it is canceling plans for a fully electric sport utility vehicle. It is a shift that may cost the carmaker around $1.9 billion.
For more of this, guest host Jess Metten and I were joined by Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Analyst. We first asked Steve what's going on with legacy auto companies and their transition to EVs.
Yeah, it's a huge kind of 180 turn for Ford. You remember, they were probably one of the first Western automakers to actually introduce EVs. You remember the Mustang Mach-E, the Ford 150 Lightning, and they're still selling well, but I think they're actually bleeding quite a bit of money. In the last 12 months, they've lost $5 billion on EVs. So, I think they need to revisit and see, instead of a market leader in EVs, they probably needs to, step back and maybe become a follower until the market recovers.
All right, Steve, this kind of goes to the heart of the matter, I think, for me and probably a lot of investors in this auto industry is what really, at the end of the day, is consumer demand for EVs. Is it fair to say it's not as much today as maybe the industry thought 2-3 years ago?
Yeah, I think the estimates out there in the past were probably a little bit frothy. Like we're actually expecting, penetration to be around 25, maybe 30% by 2030. But other estimates out there were like 50, 75% penetration rate by 2030. It's a little bit too aggressive. I think we're just coming back to reality from the hype we have. But the other thing is there's a lot of competition out there, right? The Chinese are really looking to, compete with the legacy automakers on cost, on technology. And, that brings up another question that I think investors have in their mind is this the right strategy for Ford to step back at this moment? Should they be doubling down, right? Investing more and really compete on a global level?
And you've written about, too, when it comes to Ford and the rising inventories, as well as the increasing price competition when it comes to a profitability headwind here. What do we know as far as what the rest of the year could look like when it comes to those earnings calls that executives have talked about?
Oh, there's a lot of risk in the second half. I think we're heading back to pre-COVID levels, with the supply chain smoothed out. They're ramping up production, and at the same time, interest rates are still high, right? There are talks about cutting interest rates to help out the consumers, but we haven't seen that yet. And it probably needs more than a couple of cuts before we get to a point where a consumer gets more excited about buying a much more expensive vehicle today than it was 3 years ago. Average price for a vehicle is $50,000 now. It's not 35, it's not 40, it's 50,000. So, monthly cost is a lot higher for consumer. The cost of acquisition, the cost of ownership is much higher today than before.
Our thanks to Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Analyst.
We now take a deep dive into one of our favorite Bloomberg Big Take stories of the week from Bloomberg News.
It is titled, "A $2 Trillion Reckoning Looms at Ports Become Pawns in Geopolitics." Now, the piece discusses how the world's biggest ports are vital pawns in a new area of geopolitics. They're spending billions to keep up with demand.
For more, guest host Jess Metten and I were joined by Brendan Murray, Bloomberg Global Trade Editor. We first asked Brendan to talk to us about the importance of ports around the world as it seems there's an arms race.
Yeah, exactly. So maritime ports have been kind of the forgotten cogs of the global economy. They allow countries to export, what they produce, and they allow usually developed economies to import lots of, cheap goods, ideally, like the U.S. does from China. But in a world where we're dealing with a lot of trade skirmishes going on around the world, that ports have become almost national security assets, where governments and the companies that do business around ports are investing a lot in making sure that they're efficient, that they're running smoothly, and that they're not victims of things like cyber attacks, which can really paralyze an economy. We've seen ports over the past couple of years go through this transformation from, kind of humdrum places where goods, kind of go through turnstiles for trade to become real important assets for economic security.
And I'm glad you brought that up, because economic security also when it comes to the economy. So Paul, if you remember back during the peak and the height of COVID and everything that it did on unprecedented impacts when it comes to global supply chains, ports, and shipping. So I'm curious, Brendan, when it comes to sort of the economic outlook, as we've pulled out, obviously coming a couple of years out of what happened with COVID here, what does this tell us about the direction when it comes to the U.S. and compared to its counterparts globally?
Yeah, well, it's interesting that just this week, Lloyd's List published its top 100 list of ports, and of the top 10, 7 were in China, and guess how many were in Europe or in the U.S.?
Zero,
none.
which blew me away.
Wow.
Exactly. So
you wouldn't expect that.
No.
No, you would think that a big economy like the European Union or the U.S. would have have a couple in the top 10, but places like Los Angeles, Long Beach have just steadily fallen down the list. Rotterdam fell out of the top 10 for the first time in records going back, a couple of decades. So it's China has been playing this game for a while, and when they are part of the global economy as playing by the rules, and there are no trade wars going on, that's just fine. But if China becomes a strategic rival and a geoeconomic rival of the West, then you're looking at the scales tilted heavily in their favor.
I tell you, so many cool parts of the story. And folks, if you're sitting on the beach, go read the story. If you've got a long commute today, go read this story. It is unbelievable. What really shocked me is a part of the story talking about in China how they had the BYD, which is the electric car maker. They have a plant there. They produce a gajillion of these cars and they export them around the world. So what did they do? They built a port right there. And then they have their own, they develop their own car shipping
fascinating
vessel, and they crank out just tens of thousands of these cars, and they export them around the world. Is this a concern for the U.S. government, Brendan, that perhaps we're falling behind in global shipping and global trade?
This is the thing that China over the past couple of decades would have been the leader in kind of a low cost manufacturing. So and it's stuff that that American companies don't really want to make anymore. They've moved up the value chain, but now China is moving up the value chain itself, and like you said, making things like cars and solar panels and a lot less labor intensive, more technology driven products. So that's the stuff that American companies want to compete on. And so if you've got a flood of Chinese electric vehicles, say, like you mentioned, the BYD facility kind of linking up with that large port, that's a real threat to American and European car makers. So it's something that is not a direct rivalry to something that is now in direct competition with America's and European car companies.
Beyond China, talk to us about India specifically. And how it's aiming for a slice of this export pie.
Yeah, exactly. So India has a very old, not very well developed port system. A lot of the big ships can't even pull into India's ports, so they pull into a place like Singapore or somewhere else nearby, put it on a smaller ship so they can get into India's ports. Well, India, about a couple hours north of Mumbai, is building a $9 billion deep water container port that is going to help fix some of those issues. And in the Made in India program under the Modi government, we'll get a big lift from a port like that. So there are new ports in this story that we talk about, and there are old ones that are being overhauled. But this one in India in particular was an interesting case study to focus on.
Our thanks to Brendan Murray, Bloomberg Global Trade Editor.
Coming up on the program, we're going to take a look at how China is impacting sales of the cosmetics giant Estee Lauder.
You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney.
And I'm Alex Steele, and this is Bloomberg.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
We move now to the M&A space.
The Canadian Circle K operator Couche-Tard made a proposal to take over Japanese rival and 7-Eleven owner 7&I Holdings.
With 7&I's market value exceeding $38 billion, it would be the biggest foreign takeover of a Japanese company. And merger would create the world's top operator of roughly 100,000 convenience stores.
For more, guest host Matt Miller and I were joined by Diana Rosero Pena, Bloomberg Intelligence consumer staples analyst. We first asked Diana to tell us more about Couche-Tard and why they're making this purchase.
Couche-Tard is the second largest convenience store in the United States. They manage Circle K. Yes.
Okay. But they're Canadian, and that's why they have a French name that sounds funny to American ears.
Yes, it took me actually a while to be able to pronounce their name. But so they're very acquisitive. We're not that surprised that they are, there's talks that they want to buy something. But 7-Eleven is actually a big name. Yeah. There's valuations going from like $50 billion to as much as like $85 billion. So for them to be able to do that, it's quite impressive if they are able to.
It's always surprising, I think, to people who aren't in the know that 7-Eleven is owned by a Japanese holding company. And I think they own Speedway as well. These seem like such American brands. Yep. So does Circle K, and it's owned by a Canadian company. Is there going to be antitrust issues here?
Well, for sure. The FTC, ask Kroger, they have been trying to purchase Albertsons for a couple of years now. So if they actually come up with the numbers and there's acceptance, I'm sure the FTC will have something to say. 7-Eleven has like about 14% of market share in the United States, whereas Couche-Tard with their Circle K brand, they have about 5%. So it definitely will be, up for.
Again, I'm a Wawa guy, but I can see.
Is Wawa just like a New Jersey thing?
No, but it is. What is it?
It's in the Northeast. There's mostly in the Northeast. So, but yeah,
Explain to me this convenience store business. What's the economics of a convenience store? I just see people going in and out all the time. What's the economics?
Well, basically, they want you to go in for your gas. They're very competitive in gas prices. Fuel margins have been improving in the past few years. Couche-Tard actually has about 40 cents per gallon in terms of fuel margins. But what they're making money on is when you go into the store, particularly if you buy their sandwiches, the margins for that is like 50%.
It's true. I was filling up on the way there and back for more than $4.50 a gallon.
Oh, because you're putting in the super duper high.
I go with 93.
Yep.
And then I go
fancy.
in and I pick up a Snickers bar for my kid brother, and I got, like a Twix. Each of those candy bars was more than $2.50.
Margin there.
And I'm starting to feel like a really old man, because when I was a kid, 50 cents is what you paid for these things.
So are these good businesses?
Oh yeah, if they're buying, I'm sure, they think that there's some good business. Couche-Tard has usually, they do big acquisitions. The last acquisition that they did was for $11 billion for the Total Energies in Europe. But they usually, in the US, they usually buy smaller operators retailers, they announced that they bought GetGo from Giant Eagle. So that's another convenience store, which is in the,
with a delicious
regional.
pulled pork sandwich, by the way.
Oh, well, I actually haven't tried it.
Yeah, I had
GetGo?
one this weekend. Yeah.
Where's GetGo?
I had them in Pennsylvania.
Yeah, it's regional. Yeah.
Okay. All right. It's the Midwest. It's part of the world I don't go to.
I skipped what's the one you like? The Cracker Barrel.
Cracker Barrel.
I declined.
But you probably drove through past like 100 of them on the
Yes.
80. Yes.
A lot of them. And I used to always stop because you get a books on tape at one, and then you'd return it at the next. But you no longer.
What else are we seeing in your space, Diana, in the retail space? What are some of the key things people are looking at? Because you cover a lot of retail.
Yeah, I mean, obviously, this is like the biggest thing that has happened.
It's one of the biggest deals of the year, right?
Well, yeah, even
$31
Kroger,
billion puts it like number 2.
Yeah, I mean, obviously, the Kroger Albertsons acquisition is also the talk of the town. There's like likelihood that it might not happen. The FTC might object. So
when are we going to hear about that deal? Because we've been talking about Kroger's and Albertsons for a long time.
Yeah, honestly, like it really depends on what happens with the election and how M&A friendly the FTC will be afterwards.
All right. Well, 7-Eleven, by the numbers, and this is according to Bloomberg reporting, 85,000 stores. That's huge, and they've got 157,000 employees. So that's a big business.
Yeah.
And Couche-Tard Couche-Tard's got a bigger valuation, $58 billion valuation versus 38 for the 7-Eleven. So much higher valuation using that stock and cash, I guess, to get bigger.
Yeah, I think, definitely. I mean, obviously, I see this as an Asia play, to be honest with you.
Which we've seen more and more and more of, right? I mean,
Yes.
if you look at activist investors involved in Japanese stocks, for example, it goes from 15 in 2022 to 25 last year to 28 so far this year, and we're only in the first half.
Yeah.
Good stuff.
I mean, 7-Eleven has like 31% of the Asia Pacific market share.
Oh,
so,
okay.
yeah.
Now we're talking.
We're talking.
Our thanks to Diana Rosero Pena, Bloomberg Intelligence Consumer Staples Analyst.
We turn now to the cosmetics company Estee Lauder. This week, the company said that it sees annual revenue growth below analyst expectations.
The cosmetics giant cited continued declines in prestige beauty sales in China. And separately, Estee Lauder said its longtime CEO Fabrizio Frida will retire at the end of June 2025.
For more, guest host Michael Regan and I were joined by Red Brown, a Bloomberg News Earnings Reporter. We first asked Red for his take on this week's news.
This is a clean slate, I think, for this company. We saw, obviously, CEO stepping away at the end of this year. CFO is also leaving around the same time. So, new management team. And also, if we look at the guidance that they gave out for their fiscal 2025, it came in much lower than what analysts were expecting. Analysts were expecting to see constant currency growth. They were expecting to see earnings about a whole $1 higher than what the company guided for. So again, just kind of setting a low bar for this company going forward, clean slate, and let's go from here, I think is kind of the message that they're going to be trying to change the narrative to going forward.
Red, how big of a deal is China to Estee Lauder? I know they have a pretty decent-sized business there. Was that part of the sort of disappointing results this quarter?
Yeah, I mean, I think that is the main culprit of the issues that they're going through. I mean, we've seen throughout this earnings season, a lot of these companies, especially in the luxury space that have tied their fortunes to China, are paying the price of that at the moment. So China came in really soft again this quarter. Analysts were expecting for around 3 or 4% growth in the Asia region, which is dominated by China, obviously, and what they saw was a 4% contraction in that market. So, again, paying the price for the investment in that region as China sales demand for these luxury products, whether it's LVMH's goods or fashion, anything like that, and then also skincare, fragrance, things like that are also weak as the demand wavers there.
Just reading some of the reporting on this here, the company in the midst of a turnaround. I'm not sure necessarily what has to be turned around. So when you get it, presumably a new management team coming in, do they want somebody from inside or maybe some fresh set of eyes coming from the outside? What's the thinking there?
I think both the CEO, CFO have been there for over a decade now. So, I mean, it's always good to have somebody within the company, knows the company, but it might be time for some fresh eyes. The company has missed guidance or cut guidance several times over the last few years. Analysts start to get, when that happens, analysts start to feel, they start to lose confidence in that management group's ability to understand or grapple with the business dynamics at the moment. So I think there could be some calls for an outside look. The company says they're already undertaking the next CEO search. obviously they're going to say they're considering internal and external candidates, but yeah, definitely might be time for a fresh look.
Yeah, I'm smirking here a little bit, looking back on a story we had out in February on Estee Lauder, where CEO Fabrizio Freda said, "I'm not going anywhere." So
very prescient.
Yep. But Red, I don't know how much of an expert you are on the beauty care market and skincare, but are they an outlier here as far as you go through 1 million earnings reports every quarter? Are they an outlier as far as that consumer discretionary space? Or are we seeing similar stories from other, companies that depend on, I don't know, whether it's beauty care or, high fashion? Is there a theme here?
I don't know what gave it away that I'm not an expert in the beauty space, but
you do have good skin. I'll say that.
No, I don't think they're an outlier. Look, I think you see something, for me, the similar trend that I'm picking up across all of the retail, even something as far away as Home Depot, is that people are focused on needs, not wants, and this luxury space, skincare especially, is a want. It's not a need. Fragrance is a want, not a need. So consumers are cutting back where they can, whether it's fixing your house up or making yourself appear a little bit better. It doesn't matter. That's kind of the macro pressure is going to win out in this scenario.
But as our good friend Samantha writes in, Alex Steele has always told us that you have to invest in your face, which she does. And Michael and I do not. So, I mean, and we can tell.
Clearly my face is a value stock at this point
exactly.
right now.
But all I know is during the lockdown, across the street, the Sephora store is packed.
Yeah,
I mean, no matter what, people need to get that stuff.
Yeah, I mean, I guess in the pandemic, people had a few extra bucks. They weren't spending on concerts and movies.
It shocked me how strong that category is.
Yeah.
And then right after the pandemic as well, they did really well because people were like, I'm emerging from the world. I want to make sure I look okay. I haven't shaved my face in 6 months. I might as well get a moisturizer or something. But yeah, it's those trends have just fallen off now, and they haven't really returned to like pre-pandemic levels of growth. Estee Lauder was a company that was like really flying into the pandemic and through the pandemic, and then just the fall off of China, and then the United States as well is kind of not getting a lot of attention at the moment, but like U.S. sales contracted as well this quarter. It's maybe hidden because there's been so much emphasis on China, but those are their two biggest markets, and both are underperforming, I think, at the moment. So
it still seems like China's consumer economy is a bit of a black box to analysts. Do you find a lot of surprises, either upside or downside, on companies as far as their business in China goes?
Yeah, it's hard to get a read because if you think like there was so much worry, and again, jumping around here, but I just connecting all the different kind of earnings threads, like there was so much worry going into Apple's report of like, where's the Chinese consumer? Are they buying iPhones? Things like that. It's the same dollar that's going towards these things. But yeah, it's really hard to get a read because Apple outperforms, Estee Lauder underperforms. It is just a kind of, most of the analysts they said here in New York, they're just looking at data points. So it is kind of a tough read.
Our thanks to Red Brown, Bloomberg News Earnings Reporter.
That's this week's edition of Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries.
And remember, you can access Bloomberg Intelligence through BI Go on the terminal. I'm Alex Steele.
And I'm Paul Sweeney. If you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Stay with us. Today's top stories and global business headlines are coming up right now.